Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larby.
Adriana, welcome to the show. How are you?
I'm doing really good. It's really nice to be here. How are you?
Good, good. Before we started recording, we were talking about your amazing daughter that actually spoke at a real estate conference. We'll get into that shortly, but first I want to say congratulations because a lot of parents want their kids to be excited about real estate, and that's really cool. But tell us a little bit about yourself, and then we'll talk about how to get your kids involved in real estate.
Yeah, of course. So I've been in real estate for since 2016 now. Time has been flying by. I own Ace Properties. We're an asset management company. We're specialized in value add multifamily projects, really heavily specialized in New Brunswick as a market. We have properties in St. John and Moncton. We're about 130 units now. And we have a development. I'm actually doing up my first multifamily development. We're applying to build a 60-unit purpose-built apartment building. So very exciting. I have two kids, Amy, who you just talked about, she's 10 years old, and my son Alex is 8. Been married for about 15 years, lots of ups and downs. We own 3 businesses together, my husband and I. We have a construction company, specializes in interior renovation, like end user in the west end of the GTA. I have a virtual agency that's my staffing systems building company that we provide services for myself. First of all, I need all the help, and then we offer those services to other real estate investors and real estate professionals, and then Ace Property. So we keep it busy and exciting always.
Nice. No, so do you do this full time, real estate investing in the companies, or do you also have a full-time job?
No, I've been full time since COVID.
Okay. All right. So 2020. So let's talk about that, because I mean, like me, you left, when people had a lot of question marks, they weren't really sure where things were going. I was doing it for 7 years prior to leaving and realized it was the right time. But why did you leave throughout the pandemic or during COVID?
So I got laid off.
Okay.
Wasn't optional, but I think it was the kick in the pants that I needed. Up until then, I was doing real estate with all my other time that I wasn't at work. And it took us about 4.5 years to get to about 20 units. And we were doing burrs, like full on 6 to 7 months of renovations, fourplexes, triplexes in the Hamilton area for the first 4.5 years, and they were fantastic. The market was going up like crazy, so we had a lot of success in what we were doing back then. But I got to the point where I'm like, okay, how do I scale from here? It took me this long, and I was so involved in every part of the process, from acquisition, raising the capital, project managing, construction management, property management. I just was doing it all. Didn't really have a team, didn't really have systems. I'm like, I don't know how to scale. I'm tapped out. When COVID hit and I got laid off, I'm like, something's got to change. I don't know what it is yet, but I know that for me to achieve different results, I'm going to have to start doing different things and thinking differently about the business. So I just went on this search process of okay, what is it? I was laid off. I had this time in my hands. I'm like, okay, let me go. I joined a mastermind. I hired a personal coach. And then a few months later, I hired a multifamily coach. I was just trying to figure out, okay, what's next? What is my goal here? What are my dreams? How do I get there? And that's when I switched over to multifamily. And very, very hard to look back now. I really enjoy the multifamily space.
Yeah, absolutely. And I think the more the rates are and continue to stay high, multifamily makes more sense than singles or just a duplex as an example. So why the switch from, are you still in Ontario or are you strictly now in New Brunswick?
I haven't purchased anything in Ontario in 2 years.
Okay.
I just also hard to look back. We have proof of concept out in New Brunswick. We're really bullish about the market there right now. We're looking to continue to scale. We've completed several projects and we've been able to, pay everybody back every time and experience the growth we wanted to. The purchase price per rent ratio is very good. Cap rates are good and it's very landlord friendly. They are continuing to implement regulations there. But it is a far, far way from where Ontario is now. I still have a small portfolio here in Ontario that we're keeping, but I'm really interested in continue to purchase over there.
Okay. Now you mentioned as you're scaling and you're paying them back. Is this joint venture partners or these money partners? Like you obviously went from, a few properties to many more doors. What was that process like?
Yeah, so our model with the multifamily side is we bring in equity partners. So 95% of our partnerships are with equity partners. We've used a couple of different structures from the shareholder corporate structure where investors come in with us as shareholders on the building, on the company. We've also have used a GPLP structure for larger deals, just due to the volume of investors we were bringing into the transaction. And so they partner with us. We do value add. So usually we're able to pay their original investment back within 12 to 24 months. Then they stay on with us for the next 5 years as investors in the building. And that's just been working out
Okay.
really well
Very
so
cool.
far.
Very cool. So you mentioned GPLP structure. And I think a lot of people are familiar with joint ventures. They're probably familiar with, like shareholders and different things like that. But, a GPLP structure, how do you set that up? How much does it cost and why would you set that up versus a typical JV?
Yeah, so I've only ever done a JV on my very first deal and then never did one again. And we've been using shareholder corporate structure as like the next best or easiest structure that I can find. When we had this deal in the contract, we were hoping to do a GPLP, found out really quickly that the issue we ran into is for a lender. They will only accept usually up to a maximum 7 to 8 investors or shareholders in one building. We have 17 on this one. That's just because, again, the type of raise we were doing for this project, we quickly realized shareholders wasn't an option. We went exploring to what is the next best option, and GPLP was it. There's a lot of benefits for the investors on a GPLP structure. It's a general limited partnership structure. It's limited partnership to the investors because they're only liable for whatever amount they invest into our deal, while the GP or the general partners, myself and my business partner, Ben, on the managing side, are liable for the full debt. So to them, there's benefits there. It also has a tax benefit because it is a flow through. Everything that the company earns is distributed to everybody else, and everybody pays individual taxes based on their income, as opposed to the company pays taxes and then we share and then we pay tax again. So there's a couple benefits there. In terms of cost, it was complicated to set it up. I'm told that as you continue to do them, they get easier because you already have a model built. It's yet to be seen if that's the case, but it was quite complicated. It took a couple months. I'd say about 4 months to get it set up. In terms of the cost, significant cost as well. I think we were in for about $45,000 to get it set up and going. That's between accountants, lawyers, lenders, and everybody that's involved in getting everything going with the GPLP.
Definitely a lot more than a simple JV agreement or corporate shareholder type of deal. What was the size of the project? Because you mentioned 17 investors, was it?
Yeah, so it was a purchase plus improvements project. So we closed on the portfolio at $4.25 million. It was a 50 units portfolio. The whole project, though, we did raise upfront for the renovations as well. We got a purchase plus improvements mortgage from RBC, so we had to raise 25% of the construction cost upfront, and they've been giving us the draw since the construction draw since then. Overall, the raise was $2.6 million for that project.
And did you have people coming in like at a minimum of like X amount? Like what was like, would it be like 50 grand as a minimum? Were you taking RSPs, tax-free savings accounts? So maybe share with us like, you know, how you raised that money and like what kind of funds you were accepting.
Yeah, so we always have a minimum of $100,000 for any of our projects. We did have a number of investors that came in at 200,000, which was nice. Unfortunately, I can only raise cash at this point. The only way to do register funds would be through a fund, which we don't have just yet. So everything has to be cash. But yeah, that was kind of what we were able to pull together. Everybody came in at a minimum of 100,000.
Okay. All right. That's awesome. So, you know, moving forward, how are you structuring, your future deals? Cause 45 grand, I mean, that's a lot upfront depending on this deal size and how that all plays out. Granted, there are pros and cons, but you know, definitely it is very costly. You know, moving forward, what does that look like from a, you know, setup standpoint for you guys?
Yeah, so here's what I realized. We really have, like, as of right now, we continue to explore and do three kinds of deals. So we have a few deals that we do that's just between my business partner and I. We're able to do this smaller buildings, 5, 6, 7 units that we're able to burr all together. So we do use, you know, private funds for construction and purchase. Because we're able to pay it back and we're solid with what's going to happen there. And then we keep it 100% ours. We have the next level, which is buildings, you know, all the way up to a certain amount of raise. If the raise is anywhere between around $1 million to $1.5 million, we can probably stay with a shareholder, which is what I will prefer and I will pursue instead of an LPGP. Anything above that on the raise size, then we don't have much of an option. Most likely we're going to end up with a GPLP. So we do pursue all three. Like we have we're looking at a 7-unit portfolio right now. We have a 33-unit portfolio and a 6-unit portfolio under contract. So we do pursue all different types of deals, but that's pretty much what we end up with every time.
Yeah, that's awesome. So now these are, I'm guessing, all out east, which
They're
is
all out east.
all
Yeah.
out east. So what about out east? I mean, obviously the you know, the pricing is much less, I guess, than here in Ontario. But what are some other benefits that you found investing out east that you don't have in other, you know, let's just call it Ontario as an example?
Yeah, there's quite a few things actually. I do like smaller towns. I know some people stay away with it. On the opposites, there's much less competition. We're able to grow much faster, build reputation much faster, take a larger share of the market in a very quick period of time. We got really well known. People know who we are. It's again, small town. We're talking St. John is about 65,000 population. Everybody knows our buildings. They know who bought it. Once there's a new portfolio, they know who is buying in the area. They're able to reach out to us. We're able to get off market deals much easier. We've been able to build out. Price of labor is much more accessible out there. We're able to build a team much easier. There's really high demand for labor and work that we can get there. Vacancy rates are very, very low. Immigration there has been insane, domestic and international. They have a really incredible immigration pilot program that they've had for 3 years now. And that's where you are able to get your permanent residency fairly fast by applying through New Brunswick. This is how I first heard about New Brunswick. A Brazilian friend of mine called me and said they were moving to Moncton. I said, Moncton? They live in Sarnia right now. Like, what would you do in Moncton? Like, that makes no sense to me. She said, wow, like in Ontario, I need to do a 2-year college and then get a job in my industry to apply for my permanent residency with this program they immigrated from Brazil with. And she said in New Brunswick, if you get a job, and like it has to be a specific type of job, but once you get it, within 3 months you can apply. She's like, we're going. There's a bunch of us going. Quality of living there is just much more accessible. You can buy a house. We still buy duplexes there for $150,000. Like it's still accessible to a lot of people, especially immigrants who are coming to Canada hoping for a better life. They move to Ontario and they're tight. They can't get rentals. They can't buy into the market. It's much harder to make a living here, and it's not quite what they expected. They go out to New Brunswick and they can actually have a good quality of life. They can rent, they can buy, they can work. They just have way more accessible and probably what they were expecting when they first immigrated here.
Yeah, I mean, I think every market has its pros and cons, and every market has strategies that work better, even from an investor standpoint, than others. What about like Ontario? So let's just flip it over, because I think there's still lots of great opportunity in Ontario and reasons why, which are different. Maybe same thing in other, other regions and whatnot. But what do you like about Ontario? It sounds like you're still keeping a few properties as well. Like what do you like about that market?
Yeah, so I haven't really put an offer or really looked very closely at anything in Ontario for a while. I would look at development here. I think there's a sweet spot for development versus there. Land is very cheap in St. John. Here, I think the value would be quite significant. In terms of our rentals, we have our smaller portfolios here, fourplexes, triplexes. They're not doing that great right now in this current market with the interest rates where they are and the inability or unable to increase rents as we should to be able to support things. So I do have property in Chatham, and I quite like that market. Again, going back to the smaller type of markets, I would definitely purchase more there. I'm not sure that I would purchase a tenanted building though. That's just
Yeah, you know what? And I haven't. I always like the vacant stuff that's gone through like hard times, like fires, and like they have nothing. Because yes, 100%. I will tell you there are some pros and cons to being in a place like Ontario. Like there's pros and cons to being in a place like Alberta and so forth. I think the upside in terms of like appreciation over many, many, many years, I still think Ontario is likely going to lead the way. I'm just going to guess. Again, I don't have a crystal ball, and I think the market rents are going to increase quite drastically still. So there's pros and cons. Chatham seems like a great opportunity as well. And then again, like I think a lot of people listening to these podcasts are like, oh, what about this? No shiny penny syndrome. Learn and and take action on something, whether it's Ontario, whether it's New Brunswick, whether it's Alberta, etc. There's good opportunity in many different things. From a pivoting standpoint, I mean, obviously the rates right now are at an all-time high. And we don't really know what, exactly the outcome of the next, I would say 12 to 24 months. It'll be I'm sure there's going to be a lot of turbulence. What are some of the things that you're doing, pivoting your strategy, portfolio, or anything that you can share with the audience?
Yeah, so there's quite a few things. One is on the smaller portfolio that we've had, I had to sit down and like really, really take a close look at the numbers and see how can I make sure that this stays in a positive place. The mortgage on our triplex just doubled in the last little bit. Obviously, rents have not doubled. We have long-term tenants there. Long-term is in like 2 years, so it's not that long, but still where the rents could be now, and there's not much room to increase there unless there's a turnover. So we're looking at anything that we can do. We had an outside shed that's just been using for like leftover material, like let's rent that. There was an extra spot in the back. We're going to put a parking there. We're going to rent it to one of the tenants. So how can we increase income here? Can we lower expenses? We took a look at all of our insurances and got second quotes on everything. People don't realize that you can negotiate your insurance down. We just negotiated a huge insurance decrease in one of our buildings just by asking. Like, listen, this is where we were. This is what it's now. This is what this company is offering. Can you do something for us? And they did.
Good.
And they brought it back down pretty much to what we were paying last year. So take a close look at your numbers, increase income, lower expenses wherever you can, see where you can defer and adjust. Because my goal is to keep them positive. I don't want them like negative cash flowing. Talk to your tenants. We don't realize, again, just about having a conversation. And that's what I did too. I'm like, listen, guys, the mortgage just doubled on this property. I would appreciate if you kept your eyes on the water consumption and like some couple of other expenses. Like if you can help with the landscaping instead of paying the landscaping guy to come, I would really appreciate that because that helps us cover costs. So on the bigger portfolio side, they are doing much better, to be honest. The bigger stuff is doing much better than the smaller ones because we're able to, increase the small amount to each unit. It makes a big difference on our NOI. We are refinancing everything as much as we can with the MLI Select to just give us cash in hand.
Yeah.
We're keeping healthy reserve funds on all of our buildings as well to make sure that we can account for any cash shortages or anything that may come up too.
Those are all some great points, and and little tiny things, right? That somebody could be like, now can think, oh, I could get that shed placed on the backyard and start renting it, or that extra parking spot, or like talking to the tenants. I mean, like, again, like, you've got to know who your tenants are in a sense, right? Like we had a tenant in a single family, they were paying like 16 something. Anyways, they've been there for so long, like since 2014. And we gave them options: buy the house, we'll sell the house, or we increase the rents. And now they're at $22.50. And they wanted to do it. And again, legally, can you do it? No, I mean, but if you guys both agree and then ultimately that's what happened. And now we're cash flowing on that again. But yeah, like even just having those conversations, and again, it won't happen every single time, but sometimes the tenants would prefer not to move or prefer to have you and them both win along the way. So there's always options, but yeah, definitely times are tough right now. I don't think anyone this current time is saying they're doing that much better than they used to last year. It's just what it is, right? So we've got to just find ways, like you said, to maneuver a little bit and figure out where there's going to be some extra cash that could be had. And sometimes it means maybe selling some of your current portfolio to offset some of that. And so you have some cash reserves, because I think there's going to be some opportunities that are going to come up as well. So it's that, balance between, still keeping what you have that makes sense, potentially offloading some stuff that's reached its maximum ability, and being ready for, I think, an opportunity to start negotiating with, like, I mean, you've got 3 things under contract, it sounds like. So obviously people are willing to negotiate, and we didn't have that a year ago, 2 years ago.
Definitely a lot of opportunity knocking on our door. Exciting ones too, like building we put an offer on about 5 months ago, and just numbers were way too high. It was just ridiculously high. We said no problem, like, feel free to reach back out if you ever want to talk again, and they did. So there's definitely opportunities now. Good time to buy. Although here's what I realized: mathematically, cash is low too. So this is when you want to be liquid. I'm not sure I'm as liquid as I'd like it to be, but I'm focusing on that too. Like, where do I get the resources from and the cash to be able to buy? Because it's a good opportunity if you can get in the market now. If you take action and get some of those buildings now, you're going to be very happy, 5 years, 5 years down the road for having acquired during the buyer's market.
Mm-hmm. Now, are you finding, because you're also raising capital, that it's getting harder to raise capital because people just may just not have the cash anymore, or are just weary, so they're kind of just seeing what happens? What are you seeing from that piece? Because I'm just going to guess that it's going to be more challenging than it was before.
Yeah, I definitely am finding that the cash that's the whole point of forcing this recession, is to dry cash from the market, right? So there is less cash available all around, from lenders, but also from investors who, one is, a lot of people use their HELOCs. Mm-hmm. And it's just not making sense right now to use your HELOC, or the returns have to be really substantial for you to be able to take that risk. Everybody's expenses went up, groceries went up, and gas, and everything went up. So you are needing more of your cash to pay for your daily living, which makes it less readily available for investing. So definitely, I think potentially pivoting into, and this is where I've been looking more heavily into, pivoting to being able to access registered funds may make a difference at this time, because registered funds, you're just sitting there and you want to invest in something good. And this may be a good opportunity for that.
Mm-hmm. Yeah, that's awesome. Can't wait to hear about that. Before we wrap up, let's talk about your daughter, and how to get kids interested in real estate. So for those of you that don't know, You have a 10-year-old daughter and you have a son too, but your 10-year-old daughter presented and wanted to present at one of the real estate networking events and did amazing. And like at 10 years old, knows so much about real estate and is becoming passionate about it. How did that all happen?
Yeah, I mean, and I want to give her a lot of credit because it's all her. I have a philosophy that the best way that I can parent is setting the example. I can talk their ears off and they're going to be like, no, I'm done, blah, blah, blah. I don't know what you're saying. Or I can just be and do. And then they just watch and see. I do work from home. They hear me on the phone all the time. They hear meetings. They know my partners. Like they're just there, right? Present and around everything that I do. I tell them we celebrate when we close on a building. Like I share pictures and things like that. So they know. One day I'm sitting on the kitchen island. I had just come off of a Zoom meeting with an investor. Amy is sitting beside me. She was eating or snacking or something. And she asked me, she's like, what is this investing thing? And I very quickly just like, there's a building, we put funds into it, we pay you back your interest. So she said, so you're saying that I could invest with you? I'm like, yes, yeah, sure. You can become one of our investors. It's like, hold on. So you're saying that I could like give you money and you give me more money back and I can just be chilling in my room playing my video games? Yes, technically that is true. You need to make sure it's a good investment, but yeah. She's like, okay. And it was just this massive revelation to her. She's like, okay, I'm gonna go see how much money I have. And she goes into her drawer and goes through her birthday money. And she's like, I'm gonna invest $100. I'm like, okay, that sounds good. And she's like, no, no, wait. I have more. I'm like, how about 150? How much money will I make then? I obviously giving her like a really hefty interest
Yeah,
rate so that she can like feel something that's
that's
exciting
awesome.
for her. She asks, so she's a private lender. I had her sign like the contract. I printed it off. I
Nice.
explained it to her, had her sign it. Every 15th of every month, she asks me by herself, she's like, so how much money did I make this month? Okay, this month you made like $7.50.
It's
Okay,
amazing.
that's so good. I want to reinvest. Okay, that's reinvested for you. So she's hooked. She loves it. She's like, I can just make money like that. Like, that's amazing.
That is awesome. I mean, you're probably just like giving her that. It's better than allowance if you think about it, but it's the thought in her mind that she could do this and make money on her money, which most people don't. I'm assuming she's not actually investing in the real estate per se, but like the whole concept of her understanding at such a young age is amazing.
I'll send her my quarterly reports. Like,
Nice.
I treat her fully as an investor. She's
Oh,
on
that's
my list.
awesome.
I'm like, because I want her to experience this is what it's like to actually, invest. This is what it feels like. This is your responsibility. This is where it happens, and
Very
so
cool.
definitely exciting.
Oh, that's awesome. So the last thing I want to ask before we get into the lightning round is you talked about the other business that you have for real estate investors with staff. What is that all about?
Yeah, so I co-own a virtual agency. We offer fractional services to really any business, but we're so specialized in the real estate industry because that's what I do. That's my bread and butter. We offer services when it comes to marketing, lead generation, operations, and then finance and bookkeeping. So any really major area of a business that you need help with, when I started turning or changed my focus to being an investor to being a business owner, I realized there was a lot of gaps that I needed to fill in when it came to processes, systems, and team members who's going to run all those systems that we build. Um, as I was building it and I was fulfilling what I needed to run ACE and be able to scale, I realized such a valuable service that everybody else needs as well. We're able to offer you fractional qualified North American VAs that are going to just come into your business and help you get ready for scaling.
Very cool. And now you're managing them basically on behalf of the investors, or how does that logistically look like?
Yeah, so they're your team member. What we do is you come in and you say, hey, I'm in need of an EA, or just we'll go through a discovery call and find out what are your immediate needs and what are the
Yeah.
things that we can help you with. We then match you with a VA. We have like minimal hourly packages that you get from us. But she's your team member. She'll come in, she'll do an onboarding call with you. You guys set up your goals and plans for what that quarter looks like, what the month looks like, what the week looks like. You meet with your VA regularly, and it's up to you to decide how often, what you want her to work on. And then turnkeys here to support. As an example, let's say you start working with your VA on a project and she realizes she either doesn't have the skill set or the training or the resources to complete that project or carry it forward for you. She comes back to turnkey and say, hey, I need help. We're doing this thing. I need to build a landing page or a marketing project or whatever it is that you're working on. We'll be able to support her with that. If it's training, if it's bringing a second VA to help. Right now, I use 4 different VAs on my team because they all have different expertise and specialty. I have one VA that's properties only. She does everything property related, from acquisitions to overall management and oversight, insurance quotes, due diligence, finance, refinances, communication with lenders and lawyers. She does all that work, which is
yeah,
so helpful. I have an EA that does everything else: email management, calendar management, communications, investors, quarterly reports, any research, event management, travel management. She does all that for me and helps with that. I have a marketing VA. She does social media, email campaigns, any other type of marketings that I need done for events or things like that. And then I have a bookkeeper that does all of our bookkeeping and financial reports every month.
That sounds awesome. So now, are these Canadian VAs that live in Canada?
Yes, they're all Canadian.
Okay. Yeah, because I've got a few VAs that in the Philippines. We'll talk for sure. We'll talk after this podcast. I think we were looking for potentially a Canadian VA as well. That sounds interesting. So, okay, cool. Awesome. And if somebody wants to know more about that, do you have a website for it?
We do. So find us at Turnkey Virtual Agency. We have Instagram, as well as a website. So come and find us and book a discovery call. And I'd love to hop in, find out what your business needs and how we can help.
I love it. Awesome. So the next part is the lightning round. So I'm going to ask you 5 questions. Adriana, everybody gets the same 5 questions, and you're going to give me an answer in 10 seconds or less. So you ready to play?
Let's go.
All right. Question number 1. What is your favorite real estate investing book?
Investing book? Oh, I'm going to say Steve Arnott. Is that his name?
Stephen Arnott?
Stephen Arnott, yes.
The Money People Deal one?
Yes.
Okay. All right. Number 2, it doesn't have to be real estate specific, but do you have a favorite podcast?
I've had many different ones over time. I'd say the one I listen to most right now is probably Lewis House.
Okay, awesome. And you have one of your own, I think, too, right?
Yes, and the Adriana Ostapenko podcast.
Awesome. And where can listeners find out more if they want to listen to your podcast?
Yeah, come on YouTube, Adriana Ostapenko podcast. I tried different names and they were all taken. I tried Ace Properties podcast and it was taken. So the Adriana Ostapenko podcast.
All right, cool. Number 3, what do you do for fun?
For fun, I play pickleball. I dance bachata.
Cool. Yeah. Oh, that sounds different. Something different. Number 4, if you lost everything tomorrow, your assets, your money, your real estate, how would you start again?
Yeah, I'd start by dreaming. I'd start by writing down what would be the best possible dream lifestyle I could build, and start from there.
All right, very cool. And final question, if somebody has $50,000, they want to get started, they're not too sure how, what would you recommend?
Yeah, I recommend partner with somebody that you're well aligned with. I think, when you're first starting, if you can count on a partner that has the experience and the same values and goals as you, that alone is invaluable. I would start there.
All right, awesome. Thanks for playing the lightning round. Where can my listeners reach out and find out more?
Yeah, so you can find me on Instagram, Facebook, at Adriana Ostapenko. My email is hello@ace-properties.com. Come find me there. Looking forward to chatting with some people.
Okay, awesome, Adriana. Thank you so much for being on the show. It was a pleasure having you on.
Thank you, Sarah. It was such a pleasure. I'm sure I'll be seeing you soon.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larby. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?